Howdy, folks. Welcome to the live stream. Welcome, Idiot. Welcome to ArcisFX Supporter. I didn't write that name down, you did. So welcome, everyone. We'll start in a few minutes' time. I just wanted to get things set up so that we can do sound checks and so on. I didn't write that name down. There we go. That seems to be working. Fantastic. Great to see everyone in here. Welcome, Michael. Nice to see you here, mate. And Daniel. Ali. Lovely to see you, Ali. Thanks for being here. I really appreciate it. I don't take it for granted at all. So thank you very much. Whilst you're here, folks, whilst we're setting up, we've got 7 minutes to go. Please type up your questions if you have any. And also, please make sure to like and subscribe this video. Like this video, subscribe to the channel. It really helps the algorithms identify channels that are worth watching and helps the channel grow. And what YouTube does is they push the videos out to the broader YouTube audience if they think that the videos got general interest. And they can only gauge that by your likes and your subscribes. So that really helps a lot. Thank you very much. I've just come from a live stream over at Ola Prime TV, and just to remind you, if you'd like to get me every morning at 8:30 a.m. Eastern Time, that's New York time, New York, you can get me on Ola Prime TV, 8:30 a.m. New York. That's every weekday. That's HOLA Prime, Ola Prime. You don't pronounce the H in Spanish, apparently. And folks, while you're here, please type up your questions if you've got any, so that I can address those during the live stream and talk about the things that are most important to you too. Hello, Nachlopsky Rosam. Nice to see you. Sounds like an Indonesian or Malaysian name to me. It's interesting seeing all the different names from different countries in these streams. Or maybe Thai. So folks, I'm going to start a little early and perhaps go through some of the things that don't interest the most people so that we can start this live stream off quickly, because I do want to try and finish before the bottom of the hour in about half an hour, 35 minutes time. So let me just quickly have a look at what's going on, the things that I'd like to talk about. And in the meantime, please put up your questions and let us know what you're thinking and what trades you have on, or trades that you're looking at that might be interesting for the rest of us. For those of you who are here already, welcome to you. Thank you for being here. Please make sure to like and subscribe, but also make sure that you can hear me properly. And if you can, I'd love to hear from you in the chat just to let me know that it sounds good. So I'm going to start off right away in order to save time so that we don't get bogged down and that there's a little bit of time for questions at the end. I know it's a little early, but if you missed this first part, you can rewind and catch up. So I want to talk about, I'm not going to flash up the dollar index chart, excuse me, but I do want to talk about the dollar in general and the major currencies. And as you can see, the euro has reached my blob in this big move up. And I thought we could get to 1.2. In fact, I still think we could do, but we've got pretty much most of the way there. We've gone through the top Bollinger Band twice. There's another line here. Let's make this one a little bit easier to see as well. And there's another resistance line there that we peaked and touched at precisely. So my question mark, I suppose, is still valid. It hasn't been totally answered yet, but we have got to that level and we are trying to move down. But generally, I think that we'll see further dollar strength. Excuse me. So the euro is a bit of an anomaly here, really, because we've seen strength in the other majors, but the euro's just sort of dribbled down a bit today and dropped down through the 20-period moving average here on the day chart, down towards the 50 and this previous support level. It's also a previous swing high over there, and it's the swing low over here, and it's pretty close to the 50-period moving average. So I think that might offer some support for the euro, and just basically because of my general idea that the euro is going to strengthen against the dollar, as are the other major currencies, at least for the next foreseeable while, maybe in the next couple of months. So I think we could see the euro holding that level. We may have to dip down a little bit, maybe another 100 pips. And if we drop down to that level on the euro, that's about another 80 pips down already. We may just see the bounce there and move on. So that's kind of what I think. And we'll find out soon enough. The euro makes up most of the dollar index, and the dollar index seems to be moving down, and it has a target. I'm not going to go through all of that today because of time, but you've seen that in my previous videos. Now, because of that, I'm also long. I don't have a position on the euro, but I am long on the pound. Good day, David. Martin, everything's good. Thank you very much, Martin, for the sound check. So on the pound, we do have a position. We're long from, well, basically at the support level and slightly higher up above us. And one position's in the money, one's out of the money. But we are at this very, very major support level. I was talking about this today in the Ola Prime TV live stream, and we sort of both agreed that this is a pretty critical level for the pound. There's the 100-period moving average coming up underneath, and we've got two swing lows with a double bottom, more or less where we are now. There's a little bit of space to go down further, and it looks like the pound might want to retest that bottom and aim for potentially a triple bottom over here at this level. So, but we are long already, and we have one long position from there at the trend line and one down there at that double bottom. Both logical places to buy. So we bought at the bottom initially, we broke up through the trend line and the moving averages, and we added some more on, only to be rambunched the very next day by the tweezer top engulfing dark cloud cover candle, which forced this down and down below these averages. So I did have a little moniker up the top here saying, tie me down, cable-roo, down, as in the Australian tie me down kangaroo, but, and it worked, and cable was tied down by the 20 and the 50-period moving averages, and it's now found support, we hope. I'm not ruling out a dip down to the 100-period moving average or this swing low here on the pound, which would be in line really with what the euro is looking like, that the euro might pull back down to that swing low too. Euro has definitely been weaker than the pound today. There are reasons for this. One of them has got to do with the deal, the so-called brilliant deal that was made with the US on tariffs and investments and energy and so on. Maybe not such a good deal for the Europeans after all. So there we go. We'll look to find a bottom on the euro. Not urgently looking to get into a long on the euro, but we are long on the pound already. And we're also short on the dollar yen. Now, this is the third biggest component of the dollar index. But that aside, I think we've got this bull flag that we're trading within, and we've reached up to the top. Well, the underside, it's gone a little higher now since we looked at this last, slightly through that channel center line. We've got a short position from basically where we are right now, but a few days ago, and we did dip down from there, and we bounced right back up off that moving average cluster down there. And I've said yen rising. Yen rising means this chart moves down. And I do believe that once we get down out of this potential bear flag and maybe hold here at the 100-period moving average and the channel center line, that we'll eventually break down through this channel and then down towards this now triple bottom. It's also a previous swing high, swing high, swing low, swing high, swing low, swing low, swing low. Very key level at about 139, 140 on the dollar yen. My feeling is that this belief and my trading strategy, which I've hung my hat on until proven otherwise, is that this will break down through the bear flag, down towards this flat bottom, this order block, eventually break down, and then maybe bounce back up again quite sharply. This is not going to be a one-way traffic. Maybe down to the channel bottom, back up to the channel center line, allow for a lot more of this, maybe into that corner, who knows. Maybe it's going to look like a rising, ascending triangle first, I don't know. But eventually I think we could get something like this, a rebounce back up to more or less where we are now, at about 146.5, maybe 146, maybe 147. Maybe that's a little optimistic. And then a breakdown eventually, and a very sudden dramatic move. Don't trade the breakdown if you're going to trade this on the breakout. Many breakout traders look for this sort of pattern on their charts, and they don't come along all that often, but when they do, they're very gleefully looked at by breakout traders. But a breakout trader will not trade the breakout. They'll wait for the breakout and then the retracement back up to the underside, quite often scaring us out a little bit by going a little bit too far, maybe up to the top of that green order block, and then down again, back down underneath that block or that line, that support level, and then initially down to 127. Maybe a very big bounce. This is not going to be quick, and you'll notice that we're already heading towards 2026 as we talk about this. And then eventually I think we could get down to 120, which is kind of down here. But by then we're at the end of the year, and potentially if that's a little slower than this, we could be into next year. So it's not going to be the most exciting trade, but I think if we do get that sudden break through that support level, we'll see these sorts of moves. We get these big clear out, unwinding, panic flight away from the yen carry trade into a hedge or a protection of some sort. That's what happens when we break down very quickly and we get very dramatic moves. So yeah, that's the dollar yen. I kind of think that looks okay. More of a crown than a head and shoulders. We often get crowning patterns on the yen pairs, and those crowning patterns can be interminable, go on forever. And hola, Crypto. Crypto, welcome to you, mate. Crypto one, just remind us, was it a $25,000 or a $50,000 funded trading account with Ola Prime yesterday or the day before? One of those days this week, or last week rather. Fantastic. So well done, Crypto. I'm sure you're pretty stoked. So that's the yen. So essentially, I'm viewing the dollar as a short trade against all the other majors, and as a result, I'm long on the dollar yen, short on the dollar yen rather, and I'm long on the pound. All looking a little precarious, I have to say, the pound and the euro, and those look like they need to come down. But the good news is, because of the general strength in the yen compared to the euro and the pound, we've seen the euro yen and the pound yen coming off today. We also have a long position on the Aussie dollar, by the way. I'm not going to talk about that too much today, but still looking for this to get going. We are making higher highs and higher lows, but it's a messy old zigzaggy sort of chart. Not very exciting, but we are long on that from quite a long way below us now. But, this is taking its merry old time to get going. I do want to look at the euro yen, and the pound yen is pretty similar, but we've got what Paul in the Ola Prime stream this morning called the tape measure. If you can imagine, thank you, Paul, I appreciate that. If you can imagine, those old metal tape measures, I'm not even sure if they make them anymore, I think they do, and you sort of use that clip to hold it in place, and you start shoving the tape measure out, and you, as a child, it's something you probably remember doing, you see how far you can get that tape measure to stick out before the end flops over and collapses, and then you get the kink in the tape measure unkinking, and it just flops down. So Paul thought this looked like that. Maybe he was right. We did flop down, but we did actually have to retest the underside of that rising channel. I could duplicate this line, and you'll see that it's basically a perfect channel. We've been trading within it for quite some time. We've then failed to reach the top of the channel. That's always the first sign of a channel failure, is a loss of momentum and not reaching the other side. We didn't reach the top. Most of the time before that we did. We've always reached the bottom. We didn't reach the top. Instead of that, we flopped over, went down through the bottom, just to the 20-period moving average here on the day chart, and bounced very sharply off there with 3 reversal candles, right back up to the underside of the channel line, where we sold over there. So that's, I suppose, in the money now by a few dollars, but not a lot. But we were out of money for a brief period. As we rallied up to the underside of that trend line, tried to retest it, didn't quite get there actually. And we've now got today's candle, which is a big bearish engulfing dark cloud cover candle. Long may this last. And I think if we can today, perhaps, I'm not saying we will, but certainly I'm hoping in the next day or 2 or 3 for us to push down through that support level where we got those spike lows down here a few days ago. And let's make it purple. And let's make it 2 points thick. So if we can break down through there, maybe even today, who knows, but probably not. But if we could get through there, back inside the Bollinger Band, there's a big Bollinger Band squeeze going on. Maybe we've got to get back inside the Bollinger Band, break down through there, through that tweezer bottom. That's pretty key right now in the short term. If we can get down through there, we should see this begin to move down. My target for this one is also very optimistic. And you can see my red arrows. There's the big move up. There's the bear move, bear flag, triangle, which I thought would break down through the bottom. It broke out through the top. So we've got an equidistant move through the top compared to what I thought would happen through the bottom. So there we go. Weird shape, right? There's my arrow going down. There's the actual path going up. So yeah, so that's where I'm aiming for, and it's a long way down below where we're currently trading. We're at 173.4, and that's at 145. So it's 3,000 pips down below us. I feel the same way about the pound yen. 3,000 pips sounds like a lot, but it's not really, because when you're trading at 171 yen to the pound, 3,000 pips is, it's like only half of that really in real terms, in terms of percentage-wise. It's not, real percentages. So compared to the euro or the pound or the others. And on the pound yen, I'm feeling the same way, and I think this could also move down. This one, we're in a better shape, a better position. We're not so close to our entry point, and we are actually in profit on this one. We sold at the top 200 period Bollinger Band and that order block, and a very similar pattern to the euro yen, except this one didn't go quite as high. Euro yen took off to the upside. This one tried to go to the upside, but not very vigorously, and just up into that order block and the 200 period Bollinger Band. Bollinger Bands are going sideways. We're pretty much in a range. A little bit of a splay outward at the end, but not much. And we have moved down a wee bit after just peaking out there at the top Bollinger Band. So we're short on that one too. And as I said, we're long on the Aussie dollar. Now let's go across to natural gas. And I'm sure a lot of people will be asking about this. Now, you know that we've been trading this on the continuous contract at Pepperstone until the end of last week. Hello, Ole. I'll get to some of the questions now, folks. Let me just finish off my monologue and we'll get to them straight away. And I'll greet all of you as well by name and appreciate you being here. So this is the natural gas chart at Pepperstone. This is a continuous price. And our very last trade was long right at the bottom. And if you remember, I posted up in my private group and on X late on Friday that we were going to exit or hedge, get out of that trade, essentially. So I hedged this position, but whether you hedge or take profit makes no difference. We have a whole bunch of, a tweezer top there. This is the continuous at Pepperstone. This is not the futures. We're going to talk about the futures chart shortly. We have a triangle, which is an ascending triangle. It's very skinny, small, and almost invisible triangle. Let me highlight this for you because it is an important line. Let's make it thicker. So that you can't miss that now, right? So we have an ascending triangle. We broke down through the bottom. It looks more like this triangle is now, it's obviously invalidated because it's not going to go, it's not playing a role right now, but it does look like we've got this sort of sideways channel or range, and it's moving sideways. It looks like a bear flag, in fact, if anything. But we're not trading that anymore. I left that behind last week because my futures broker has now rolled over, and I'm able to trade the futures back again starting today. So we've now taken a position. Our last position was a long time ago, 24th of July. We haven't traded the futures since then because of the approaching rollover. Now that the rollover has passed by, I'm back onto the futures and out of the continuous at Pepperstone. Right, now what we can do here is a very similar thing. Just kind of draw in this range and see where we are. It's not a triangle like we saw in the other one, but it is a pretty good range. And let's try and neaten this up for you all, for all y'all. So let's draw that along there and along there and try and get a nice bead on this chart. So I'm going to get rid of these extensions. I'm going to make this a little bit more colorful and observable, and I'm going to make the lines black. I'm a little obsessive, I do realize that, but I'm not trying to be. So what we've got here, whereas, now this is pretty important, folks. I want to point out the difference between these two charts. Right, so we've got this chart here, which looks like a bear flag on the continuous price at Pepperstone. We've got this chart here, which looks like a bull flag on the futures over at Black Bull. Simply because we had a bit of a rally up into that bull flag off the bottom there last week. So two things tracking the same commodity, different way of pricing it, but different looking charts. You could say that was maybe a bull flag on the continuous, the middle page, the middle chart here, but maybe not. Looks more like a bear flag at first glance. Bear flag, bull flag, same thing. So what do we do? Well, I don't know. So I'll tell you what my strategy is. So at least we're not trading the continuous now. We're back on the futures, so we don't have to think about that too much. But it does look like a bull flag, but we're not doing very well. We've traded, this is a 4-hour chart. We've been trading sideways for how many candles? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 4-hour candles. And 4 fours is 16 plus 40, that's 56 hours. We've been stuck in the range between $3.20 and $3.11. So a 9-cent range for 70 plus hours. What's going to happen next? Well, the next move should be quite dramatic and should be quite powerful because we've got this consolidation range going on. And whether it'll be to the top or to the bottom, I'm not too sure. I've got a plan though. If it's to the top, we'll make profit and we'll probably get out. I'm looking for a move up to about $4. We'll get out along the way. I want to point out one big picture to you that you may not have remembered or seen before. I'm sort of digressing here. Look at this big picture on the day chart. We've got a left-hand shoulder potential. It's not a head and shoulders pattern at all until the neckline is broken, which it is not. The neckline is at $3. Left-hand shoulder, head, right-hand shoulder with a very skew right-hand shoulder. Very squashed, very difficult passage through the birth canal. But nevertheless, you may consider that still to be a head and shoulders. But on top of that, we've got a big move down from the head part of the head and shoulders down to the bottom. Then the rally up to the right-hand shoulder took place within the context of the bear move, bear flag, and now we've broken down through that bear flag after having tried to get back inside, these two red lines, having tried to get back inside, and then we've now failed down through the bottom. So looking at this in a bigger perspective, you could say this might go to 2.5 or 2.2 or even lower. Sure, there we go. Looking at it from a different perspective, maybe from a macroeconomic perspective, you might consider this could go to $4 or $4.50. That's also possibly true. Then we've got weather patterns going on and we've got seasonality, and those all play a role. But if you generally zoom out and look at this much bigger picture, it doesn't look great, even though I'm bullish. And the idea with trading, if you're a technical trader or if you're a combination trader between technicals and fundamentals and market psychology, if you will, that's kind of where I bracket myself, then you've got to consider all of it together. If you're considering this purely technically, it doesn't look good. And it looks like we are heading down towards 2.5, but more like 2.1, 2.2. So how do we decide? Well, the key to all of this, I think, is roughly this $3 level that we've bounced off already once. That's when we got long. And the low part of that low, the lowest part of that low there, and I'm going to redraw a line just to make sure that you understand where this is at $2.95. So it's below $3, and it's at that purple line just below. So that's my line in the sand. If we break and close beneath that level, I will hedge the entire position. I've only got a small position on so far. I'm planning to add more to this long position should we dip down close to $3, closer to the purple arrow on this chart. Let's go back to the 4-hour chart. Let's have a closer look. Should we dip down to, hang on. Should we dip down to sort of the purple arrow, down to the bottom there, maybe slightly down below that, even down below $2, $2.97, $2.95, $2.98, $3.01, something like that, I'll add another position, but I'll immediately place my hedge straight below this purple line at $2.95. Let's make it $2.93. So I'll put my hedge level at $2.93. I'll add another long position as close to $3 or $2.97 as possible, and then I'll hedge the entire lot if we break and close beneath that level. If we don't do that and we keep moving up from here, and it's not looking great, I've already said that, but you never know. We are still within the block. We haven't broken out yet, and it doesn't look great. The candle, the sort of last candle before this one. Let's have a look at this one. Was it also a spike? No. So the last candle before this one was in fact a wick high, that one there. So it doesn't look great, but we have a plan. So I'm going to add some more size on closer to $3, hedge the entire lot below $2.95, and hold, barring all of that happening, hold this for $4, probably get some out at $3.75, always $3.75 is a big number, and then closer to $4, and then we'll see how far we can go. If we can break above $4, retest it from the top side and bounce off there, then I'll consider adding some more size to that potentially. Or if we're out or hedged, I'll bias myself back to the long side in that case. So that's natural gas. I'll come back to your questions. I'm sure there will be some. And then on WTI oil, pretty much no change, as you can see. This is a day chart, believe it or not. And since the 24th of June, it's a very, very long time ago now, because we are on the 28th of July. So it's more than a month ago. We've not moved out of this range. Big move down, bear flag, next move down would be equivalent to the size of that bear move down, the impulse move. Let's have a look at that. What I need to do is find my drawing tool. It's probably the best one to use. And I'm going to draw it right from the top, where we got short, down to the bottom of the flag, or the move. Bottom of the flag, sure. And that's that. Now I'm going to clone that line and copy it and drag it to the top of the flag at the end of the flag. All right, top of the range, really, basically, something like that. And that gives us a rough target for WTI. So there's the move down, bear move, bear flag, and the size of the move down thereafter. The extension is equal to the original move, both in size and in this case gradient. I don't think we'll go straight down. Probably more like that. But there you go. That's my target down at the bottom of the channel again, close to $55. And I think we'll bounce off there pretty sharply, maybe all the way back up to the zone here at about 60, 62, and eventually down below 55. And I think at some point we'll probably test $50 and see if we can get down below there. I think it'll be tough, but it's possible. Right, now, and that's all that. Now, there's another couple of things here on gold and Bitcoin. I'm going to talk about gold first of all. I'm going to show you some actual real-life Bitcoin and Ethereum and XRP positions. Not very exciting because we've taken most of it off now. But let's look at gold to start with. And please go and check this out on X. There's an interesting poll there. Most people think that we're going up. I don't think so. My path is path B. I'm not going to go into this in detail. We've talked about this a lot recently. But this is it. We've broken down, by the way. We've broken out of this rising wedge, not a rising wedge, ascending triangle. We've broken down through the bottom right now in this 4-hour candle, day candle, actually. Let's have a look at the 4-hour, see exactly where we are. And there we go. Big move down, and we are now confirmed moving down into a bearish pattern. My next target for this is 3120 down here, path B, and the target thereafter if we do get some further downward momentum, is around about $3,000. This trend line, and it's also where the 200-period moving average is. Let's go to the day chart. There's the trend line, the black line where it says C, that's the line. Beautiful. There's another trend line here that we've now broken down below. Beautiful. There's also a rising ascending triangle, this one here. And maybe I can fill this in for you. I don't know, does it? No. Okay. Anyway, you can see it there. Why doesn't it have any filling? That's what I want to know. Anyway, there's the ascending triangle and that black trend line. We've broken down below both of them. And if we zoom in even further, you can see we've broken down below the 20 and the 50-period moving averages. The 100 is below us, and the 200 is my extreme target down here at point C. So, interesting. A seems to be on hold for the moment, although we do have some support just below us, down here at 32.50 and at 32.80, and we're heading down towards there, almost there. So watch out for this big, heavily traded congestion zone that we're busy falling into. We've got the support at 32.50. I think that's a minor support compared to this one, and I think we'll head down to 31.20 now. And with a bit of luck, I don't know if it's likely or even possible, we could get down to $3,000. The 200-period moving average, the long-term trend line, and this previous support and resistance level. And no doubt, it's also probably some sort of Fibonacci level. But we don't need that because we've got so much going for that already. So that's gold. We remain short but hedged. I'll take the short hedge off at the bottom, wherever that might be. Take profit on that short because we now have a short position on and we have a long position on. And then I'll add to the long position when we turn around and try and ride this all the way back up to where we came from and even higher. So that's the plan on gold. And on silver, we're still long. And we haven't been stopped out at break even or for a profit. We got loads of positions and we've started buying silver a very long time ago, back in May. In fact, we bought before that. I think we've been long since early in the year or late last year. But some of these positions are closed now, but our last positions were entered around about this level. You can see the arrows. And we're coming back down to the 20-period moving average right now. There's a previous swing low here where we got in on the last tranche, and that's at danger of being stopped out at break even should we dip down into that level. Doesn't really matter though, because if we do get stopped out break even, that means gold's probably moving down further, which is what we want. I want gold to get down as close to $3,000 as possible. Maybe it's only 31.20, but if we can get closer to $3,000, I'll be lapping that up for a buy. And then on copper, this is the great play of the day, and this has worked out absolutely beautifully, folks. And we may consider taking profit here, maybe not now, but this is the day chart on copper. We got short, literally almost at the top dollar, right at the top Bollinger Band, through that big resistance level. I had some lines drawn on here. There we go. And, well, we got there a little early, actually. My line starts there. We got there early, but we took the short in any event. And my target is something like this, although I need to move this line a little closer to home. So perhaps something like that is kind of what's in my mind. I don't know how far we can get down on copper. It's incredibly overbought, and it's also trading at the highest price it's ever traded. So it's right in that zone of discovery, price discovery. How far can we go up? Well, we'll go up as far as we can until people get scared and don't want to hold on to these positions and start bailing out like we've seen. So we're now short. Everyone else is getting short, clearly, because the market's moving down rapidly. And we'll watch this very closely. We'll probably have to go down to the 4-hour naked. And we're short on copper, naked trade, no hedges. NASDAQ and S&P, we're long. My positions are shown here, these green arrows. We have a hedge position from there. So we got short there, we got short there, hedge the entire lot there. That hedge remains in place. I could just take it off right now and take the small loss, or I can leave it in place and hope to come back there one day and see what happens. If we do get a dramatic mark, look, it's not a lot of money. It's pennies on the dollar, really, this hedge position. And people always ask me every week, why don't I just take it off? It's costing you money. It's not costing me a lot because we've got a long and a short, so the overnight carries mostly offset each other. But why am I just holding on to a trade with a locked-in loss? I don't know. Maybe, you never know. It's kind of like a stink bid. If the market comes dramatically back and gets back into the zone, I can maybe make some money off those hedges. If I just close them down right now, I've got no chance of making any money. I'll have to take that small loss. So just a silly little way I like to trade. Where are we now? Well, we're moving up. I wouldn't be surprised if we've got a big melt up on our hands. It certainly looks like it. There's nothing above us to stop us apart from fear, doubt, and greed. Nothing to stop this moving up right now. Technically, I'm talking about. Above us, we have the channel line right up here, about 24,100. We've got a Fibonacci extension at 23,800, and we've got the top Bollinger Band at 24. So that's kind of my target for the NASDAQ, and I'm going to remain long as we keep moving up. Same on the S&P. Even more sort of exponential here on the S&P. I did notice, actually, this is super interesting. I was watching something on, I don't know, CNBC or something, and the projections, and I can't remember who it is, someone on Wall Street, one of the big banks or names or trading companies, I think it's JP Morgan, I think it is, I've just remembered, has a target right where my target is for the S&P this year. JP Morgan and I agree that the S&P could get to 6,800 before the end of the year. And in fact, my path has us going up there in the next few days or weeks. So an exponential blow off top and then the reversal. That's my idea. I don't know if it's accurate or even plausible, but at least I am in the right direction. Now, what happened yesterday was over the weekend, we gapped up to this level here at 6,410, and we've moved down progressively in the early part of trading today. All we've done is we've closed the gap that occurred over the weekend, and we traded down to the bottom of the gap, almost precisely actually, and we've bounced up slightly since then. I think this is a gap up, fill in a responsible, orderly fashion, and then a continuation, rather than the sort of gap up and go. It's always better to see the gap up, refill, and then responsibly rally up into the next level, rather than the gung-ho gap and go, to the moon type attitude. We don't really want that, but I think this is doing okay. I like the way it's dipped down, cleaned the gap out, and we keep going. And I think we'll get up to that level today. My target for today, 64.40. I think we'll come back down to the top of the trend line after that. And then, these are rough ideas, folks. These are not precise. I like to draw these targets. It's not a prediction. It's not something I base my trade on. It's an idea, and I watch it unfold. And if I'm wrong, I'm wrong. And if it unfolds according to roughly what I've drawn in here, I know that I'm sort of on the right track in terms of my thinking. I also like to leave the lines on the chart so that I can remind myself. I trade, like 40 different instruments. So sometimes you can go back to a chart 3 days later and forget where those lines were. So I leave them on the chart just like that. So that's my target, 6,800, 7, 8, 9, something like that on the S&P. And I think we could have a big melt up on our hands. But I don't know. Who knows? These markets should be coming down. They should have corrected by now. They have not. They keep moving up. And I made a video for Ola Prime TV this morning saying something like my $1 million trading tip is, and what was it? Well, it was be ambitious, ride the trend, and stay in the direction that the market's moving as much as possible. Don't pick tops. Don't pick bottoms. Bottom fishing, top picking always leads to disaster, especially amongst retail traders. Not because it's a bad idea overall in general, because it is, but also because they're particularly bad at doing it as well on top of it, which compounds that problem. So not only is it a bad idea to start with, but they're also very bad at doing the bad thing, which makes it worse. So yeah, don't try and pick tops and bottoms unless you're very good at it and you know what you're doing. It's much better to go with a trend if you can. And folks, I think that's basically covered it all. We've covered currencies, basically short on the dollar overall, looking to buy dips on the majors. Stocks, lockout rally, maybe, across the board. We're also long on MicroStrategy. It's called, they haven't changed the name on TradingView. It's called Strategy now. The ticker is MSTR. We're long on Strategy. We're long on Tesla. Beautiful move up today. Elon once said about 3-4 years ago, I watched him say it for the first time. He said, and I have to paraphrase, I can't remember the precise words, but don't bet against Tesla. You will lose. A typical Elon thing to say, of course, dramatic and weird, but he might be right. And I'm not betting against Tesla. I'm a Tesla bull at the moment. I also like to buy Alphabet, Google. We haven't got a position on here yet, but I do like the way this is shaping up. And of course, earnings were beautifully beat on both Alphabet and to an extent on Tesla too. But Google beat with a capital B, and Tesla beat with a small b, and Google responded accordingly. And NVIDIA is the only one that we're short on currently. So we don't have any other short positions in the market in equities apart from NVIDIA. We have just peaked above that high by a couple of dollars today, and so I'll have to consider hedging this. I'm watching it closely. It's very feeble, a trickle up, a poke up, almost nothing, no momentum. Let's see, maybe this will just roll over today, tomorrow, or the next day and carry on moving down. It depends really on what the stock market's going to do overall in general. And if they do just keep melting up, as you know, rising tide lifts all ships and boats. And I think, folks, that's everything. We're still long on the rand, dollar rand. No trades on the VIX, looking for this to come back into the zone. I only trade the VIX a few times a year. Whenever we get into the green zone, and preferably closer to the bottom of the green zone, I look to buy the VIX. So into the green zone, and then we get out in the high 20s or 30s, and then we wait again for the thing to drop back down into the green zone, preferably as close to the bottom as possible. Our last trade, we took only two trades last year on the VIX, one from there, and I'll clone this and show you where the other position was, and one from there. Those are the only two times we traded the VIX roughly in the last 24 months. And we've got to get back down into the green zone before we consider a new trade on that. TLT, I'm long. All sorts of traffic above us. We've got a moving averages, we're right in the middle of the 20 and the 50 right now. There's the 100, there's the 200. We've got a swing high, a swing high, a swing high, and all of that's got to get through. We've got to get through all of that. And another big swing high over here in the center of your page. And we've got to get through all of that just to get above 100. And that's a lot of work. And it's, yeah, I don't know. My break-even points are around about 89. We're trading at 86 now. So not great, 3% down. And it's actually a lot more than 3%, by the way, because I've been holding this position for quite a long time now. And the brokers just gobble up those overnights. I think, let me just finish off with softs and grains whilst we're here. We're running a little over time, but that's okay. Still long on sugar, bouncing up quite nicely. I think this is going to be fine. This is a great trade, I think. We've got a bit of traffic to get through, particularly in this zone here where it's darkly shaded. But if we can push up through there, it's a conglomeration, two different supports on top of each other, or resistance levels rather, and get up through that apex. I think we'll get up to the top of that channel line eventually, pretty soon. Cocoa, we talked about this. I talked about this yesterday in yesterday's video. If you do fancy the short side on cocoa, this is a good place to be selling. I've got one position from over there, and I'm considering adding a new one. I want to see how today finishes off, because we are sort of re-attacking that trend line. But if we fail here today, then there may be a chance for me to resell, add to that short position, and add another short tranche there. The overall path remains intact, I think, so far, and it's something like that. I think we get down into quite a lot lower here on cocoa. That's just the beginning, really. Let me just sort of change this. That's just the beginning where I've got the question mark. I think we could go much lower. So that's just really the start. And perhaps we can just follow the gradient of this trend line that's formed on top of the price action so far. That means we could get down to the sort of level we should be trading at about 3,500. And that will be sometime early next year, the first quarter of next year, something like that. So a long hold, these commodities aren't moving, and they haven't been moving for some time, even though the commodity super cycle has come and gone about 17 times, but we've never seen it. But there you go. This is coffee. We're short on coffee from the channel center line. Coffee is another one, basically. If you'd like to sell this, it might be interesting, depending on your positioning, how much profit you made on these shorts from the top. We've been selling coffee for a long time, but we reached the channel center line. It's a very small channel. It's not a big, significant channel, but it's there. We got back to the channel center line. I think we could trade along something like this path going forward and, just sort of dribbling down, but not dribbling really, sort of trending rather. Dribbling is not the right word. But this skinny channel here, it's going to have to be redrawn at some point. It's not, it's not a good channel. But any rallies, and I think particularly if we could get back up to the underside of the broader, bigger channel, the purple one, if we could get up to about, I'd say 346 to 350, that would be the best place to resell. We're a little bit lower than that. Maybe the top of the channel. I don't know. I think maybe this channel is a bit misleading. It's too skinny, too steep, and too just meaningless, really, I suppose. So I'm going to take that away. And I'm going to take this away as well. And if you do that, you can see we've got some support where we're currently trading. Actually, let's just use this line. That's where we are. There's a little bit of space down below us. We could go a little lower, I suppose, but let's say that's the support level. So we've got to see this break down through here, and any bounces back up into these zones would be good selling areas. I don't really do fibs with these sort of softs and grains. They don't work that well, but if you want to, you can put a Fibonacci retracement level. That 38% fib at 343 is right at the channel underneath. That would be a great place. And maybe, just maybe, coffee is just making its way up to that zone again, and then we'll have a chance to add to our existing short position. And that's coffee. Orange juice, we have a short on. Not very exciting, just to let you know. Short on orange juice, looking for much lower. Lithium is lit, as I keep on saying, and I will keep on saying because I like it. I like saying that. Lithium is lit. And I'm going to be buying lithium anywhere into this channel gap between these two lines, and hopefully at 41.50 to 42.10. And that's the gap that occurred during this rally. There's another gap further down that has not been filled. There's a gap here that has not been filled. They don't need to be filled necessarily, but sometimes they do, and it would be a good place for us to look to buy. I could also put a Fibonacci level in on this one. I don't do this as much with commodities, but one should, I suppose. And you can see there's a fib there at the channel top. That would be the best place to get back into to buy lithium for the next move up. Now, also notice that Fibonacci level, I think I'll be waiting for this level. I won't be rushing into this one probably. So that fib there, which is a 38% retracement of the move from the bottom up to where we reached at the top there, is right at the channel line and these previous supports. Before that, very messy and silly breakdown earlier in the year because of the Trump stuff. So can we get back down there and bounce off that channel top and that horizontal line and the 38% Fibonacci level? Will the market give us that gift? Because if we do get that, it will be a gift to buy LIT, lit, at $40. We're trading at 46 now. Actually, 43 and a bit, 43 and a half. So we could drop another 10% back down and look to buy on the dips, and that would be an absolutely beautiful trade. Something like that, maybe just down through that level a bit to clear it out. Something like this, and off we go. So that's lithium, and it's probably one of the most exciting plays that I think is coming up. But I'm hoping that we'll get the chance to buy either at the gap there in the middle at about 41 or down here at about $40. And that's lithium. Lithium is lit. A lot of it comes from Kazakhstan. And then wheat, super nothing, super cycle, super nothing. That's what this means. Super cycle, super nothing. Still dribbling along the bottom, but definitely not reaching the channel bottom now and holding at the middle. And let me just quickly make this one darker. You can see that in this falling wedge, we have now failed so far to reach the bottom of this falling wedge, which looks like that. Okay, this is the falling wedge. I don't know why I've got this line on here. Oh, that's the bottom over there. All right, doesn't matter. You could use either of these lines. Doesn't really make a big difference. The point is, this is the falling wedge, the whole thing, and we are now struggling to get down to the bottom of the falling wedge, which means the short is wrong, the long must be right. Okay? There's a rhyme that goes along those lines. If the long is wrong, the short is something like that. I can't remember. But basically, we're not getting down there. We're finding support. We're not moving up. Our last long position was basically where we are currently trading. And we're long on corn and we're long on cotton. Corn crashing down. Some concerns here, potentially. But let's see how today closes. Just down to that low again and back into that order block. We've also got a low, previous swing low, just around about where we are currently trading. Let me put a line in there, over there. So we're at kind of a support there. I don't know, not looking great. So what's happened to this commodity super cycle, folks? I don't know, but I'm holding on and waiting for it. Not really. We don't have a lot on many of these now. It's mainly the lithium play that I'm interested in. We've got some on wheat, corn, and cotton. Actually, all of them. A little bit on orange juice shorts. We've worked out about 50% of our shorts on cocoa and coffee. And then sugar longs, we're only just getting going. That's taking some time as well. So we'll see how those go. And folks, I think that's all for today. And I'm trying to go through some questions and greetings. I'm not going to be able to get to many of the questions, unfortunately, or any of them, because I've run out of time. So I will go through them, but we'll try and address those in the next live stream, if you don't mind. So Ninja says, can we analyze the euro against the Australian dollar? Not today, thanks. Sorry, mate, no time for that, but an interesting one. Two disparate currencies in terms of rates, in terms of what their countries produce, and their economies. Very different economies. Robbie, nice to see you, mate. Sounds good. Thank you. Roby. Good day, John Brennan. Nice to see you. Emily Trading. Always nice to see you. Robson. Great. Woo Sean. Wheat. Wheat is getting annoying. Yes, thanks, Sean. Woo Sean. Wheat is annoying. David Morell. Hi there. Martin. Lovely to see you. MD. Tanil. Levent. Roby. Jim. Cryptow3B, who won a large trading account yesterday over at Ola Prime. $25,000 funded account, challenge account. Well done, Crypto. It's interesting that you won that, isn't it? And that you happen to be in my private group. Didn't know that was going to happen. Ole, welcome to you from Germany. And Sean May from Cape Coral, Florida. Nigel, great to see you, mate. Zed Pepe, nice to see you too. Roby, again, Marcus. And so on and so on and so on. So many people. It's wonderful to see you all. I really appreciate you being in these streams. But I do have to love and leave you right now because I've got a lot of stuff I've got to catch up with and some trades to put on and look at. So for those of you in my private group, I'll be there in 2 minutes and a couple of trades I want to put on or look at. If you're not in my private group and you'd like to, there's a link below for the Traders Survival Kit, and go there first, because if you download that, you'll get a 20% discount on all of my products, including my private group in perpetuity. So if you join now at discount, you'll be discounted forever in my private group, plus all my trading courses, including a natural gas trading course, which is called the Widowmaker, which has been absolutely a smash hit, really. And if you're interested in trading natural gas and you want to learn how, then the Widowmaker natural gas trading course is just the right thing for you. And this is where natural gas is, just to finish off. Trying to poke down through there, still above that channel blob. Potential bull flag, really. Still holding it. Probably have to draw it a little bit longer out. It's taking some time. All right, folks. Yeah, so if you'd like to join any of my stuff or get any of my courses or join the private group, there's a link below for the Traders Survival Kit. And in there, you'll get a whole bunch of a video, my G7 trading system ebook, which I wrote 20 years ago, almost 30 now, actually. And my music library over at Suno AI, all the trading music. and discounts on all of my courses and my private group. So go and check that out. And if you don't want any of that, and if it doesn't interest you at all, and you're not going to spend your money, that's fine too. But please like and subscribe in this video right below the channel, right below this video right now. Have a great trading day, everyone. It's been fantastic. Remember, FOMC on Wednesday. Before the FOMC, are we going to get a closed door meeting or an open door meeting? Is the court going to rule in the favor of one way or the other? I don't know what's going to happen with that. And if so, if this meeting has to be held in public, so to speak, we'll find out some super interesting things that no one's ever seen before. In 113 years, the Fed has met behind closed doors. They publish minutes. No one knows what goes on behind those doors. Have a great trading day. I'll see you next time.